Good morning, everyone. Welcome to another video brought to you by Total Control Traders. If you know anyone that may benefit from the content we provide, please consider retweeting and sharing our channel. Thank you, Atomic Bond, for retweeting our video again. And let's get right into it. So seeing a gap up on majority of the market, and I say majority because Dow is still red right now. Potential follow through on that daily bear divergence on Dow. So be a little bit wary on your bull positions, as Dow is the 65 most prominent companies. If that were to begin pulling back, I would imagine the rest of the market to pull back with it. So SPX, we were just about breaking bull on this 30-minute wedge until just now that we're getting a little bit of a pullback. All right, let's take a look at the daily. So on the daily, still in that ascending megaphone pattern. 1, 2, 3, 4 rejections now with multiple supports. 3 key supports, but multiple supports from back here on the lower trend line. Now on SPX, I'm gonna go over a few reasons why give me one sec, guys. And go over a few reasons why that there's some concerns on the market, particularly that I'm looking at. First, now that I'm looking at it, SPX is bull flagging right underneath this previous all-time high resistance. We can see triple rejection from Monday, Tuesday, Wednesday already. And with today, we're gonna need a direction follow through on into new all-time high. Okay, yeah, so today on the SPX, we're gonna need a direction follow through on this bull flag into new all-time high, or else this is a red flag. Bull flagging under previous resistance, considerable red flag. Not to mention the Dow's daily bear divergence seeing a little bit of follow through. We're gonna need to see whether if there's a follow through today. If there is, we should see trading right on that daily 8 or even under. Today going into tomorrow for the remainder of the week. Reminder, this week is a shorter week, so we're gonna need to see get somewhat of a direction on the market. So that's SPX and down. On the NAS, there is on the NAS overnight we bounced back up to this resistance zone. So shorter term wise, there's been 1, 2, 4 rejections so far with 5 rejections so far with support, 2 supports. So key to break right now, NAS might have a little bit of trouble. Just if you were to look at this, there is a key trend line right now alongside a mini key zone that needs to be broken. So this was marked yesterday based on the confluence of that key trend line as well as the key zone. So from here, we're gonna need to see a break today, or we might see a hard rejection from here. And as we all know, if NAS were to see a hard rejection, the other markets will likely see the same thing. Now on Russell, we are seeing a bounce again. On the daily, Russell, am still looking up at the GP. That would be an ideal entry for bear play. If you look at the Russell on a weekly chart, Russell has ran quite a bit, more than 100%. 148% in 1 year, 52 weeks, 148%. So we're gonna need a weekly higher low relatively soon. If we were to look for the weekly higher low, begin to look for the weekly higher low, some potential zones. First would be the 0.382, which lines up with this key zone. Next, following that, 0.5, I'm not seeing too much, not a whole lot of resistance or supports. Neither do we have that GP, but then the previous all-time high is right underneath a GP. So with that, let's go over some hot tickers, or tickers that I'm watching to be more specific. First one, BTC. Bitcoin on the daily, seeing a little bit of a move up. Decent bull volume, lack of bear volume, potential for a bull flag here. So this bull flag, I don't think is valid anymore. On the weekly, essentially the weekly 8 is still dragging up. Unless this week ends in a bit of a red, that can be considered bull flag. But right now, it doesn't look like it's going to. So Bitcoin remains strong. Now, I'm going to go over the 3 reasons, or this quite a few, 7 reasons. Now, 8 reasons why I'm looking more so bearish than before. On the shorter term, probably a little bit more bullish, but on the longer term, I am still looking bearish. First reason being, as we just discussed, on the daily, SPX is bull flagging under the previous all-time high. Second, as most of you know already, I use DXY US dollars as a main indicator for what's going to happen to the market. US dollars has broken over this key resistance. So we've broken over, if you look at the last move, we've broken over this first resistance, top of the key zone on 92.127. Then as of Tuesday, we've broken over this key resistance that we found previous supports and previous rejections on 92.824. Following that, the next resistance up is 93.725. And this is the second reason why I'm going a little bit more bearish on the market. However, if you look at this, we are a little bit extended from the daily 8. So short-term wise, there can be some bullish action in the market. But overall, US dollars remain strong, meaning the market is looking a little bit more bearish to me. So that's the second reason. Third is VIX. This was yesterday's reason. VIX is not completely breaking down. However, we are seeing a little bit of breakdown, and we did see 2 supports bounces from that lower trend line of the long-term wedge. So we found support on this lower trend line multiple times. I don't know why there's 2 trend lines. We don't need this one. Yeah, so we found support on this lower trend line multiple times. And then as of recent, we saw another 2 bounces from this VIX trend line. So that is a third reason. Then fourth reason, SPX, aside from the daily bull flag underneath the resistance, we have now triple rejection from that previous all-time high zone. Fifth reason, NAS, potential of ABC pattern. If we look at on the weekly weekly chart, you can see on the weekly chart there is A, and now there's potential for a B, a lower high. We are still trading under that weekly 8, and that's why today is key for NAS. We're gonna need to either break over that key zone, or we're gonna start seeing some bearish actions. And the sixth reason, not to mention, daily bear divergence on the Dow. Seventh, there's a lot of reasons. Seventh reason, US 10-year continues to rise on this daily bull divergence that we are now seeing a little bit of follow through followed by a rejection. Now, short-term wise, market can be looking bullish because we did see a rejection from this increased momentum trend line. We backtested it, saw a decent rejection. So let's see if today gets some follow through on this rejection. That is a daily bear divergence as well. So we're going to move that because now essentially this has corrected it a little bit. Daily bear divergence. That's the 7th reason. And the 8th, but not the least, the 8th reason, gold. So if we're to look at gold on the weekly chart, we can see previously, the last time we made all-time highs, we found support at this resistance and we bounced. So similar idea over here. We're finding support at this previous resistance. Last time we found it, we bounced over the next 2 weeks. This time we are right on it. So we're gonna have to see if we see a bounce going over the next 2-3 weeks. So there's 8 reasons, and that is more than enough for me to be convinced to go bearish. But I guess the time will tell on what exactly is going to happen to the market. Based on Dow, based on SPX, I am bearish as of this moment. Remember, choppy actions remain, meaning stay light on your feet, whether that's being agile, smaller on your swing positions, or just less trades. All right, now let's get over some tickers. First one, Tesla. Congrats, Tesla bulls. Gap up open, straight over that 88. Not a whole lot of a gap up open, 2%. It is very decent. For those of you that swung dailies 650, should see some decent payouts. So congrats, Tesla bulls. From here, we did see yesterday was the perfect play, perfect bounce play. If we look at this, now there was a wedge developing as well. So let's draw this. Can't remember where the wedge was. I think it was something along the lines of this. Something like that. So there was a wedge developing on a shorter time frame. You can see support from back here, support from here, and yesterday was the 3rd support. Not to mention the lower trend line of the long-term channel that we had developed ever since February of 2020. We were right on that lower trend line of the channel as well. So this was a perfect bounce play area. For those of you that played it into today's gap up, you will see roughly about a 10% move so far. So congrats, Tesla bulls. Next one is TDOC. TDOC seeing a bounce after a daily bull divergence. Not a whole lot of follow through yet. Yeah, so gap up open today. We're gonna need to see further follow through breaking this previous trend line. Last time we broke over it was a breakout fake out, huge rejection coming, or huge sell off following that. TDOC still doesn't look too strong to me. We are holding that lower part of the key zone. That is a must hold now. If we look at it, this is previous rejection, and then became support. We broke down under, got bought up immediately, and then became support, broke down under, bought up again, broke down, bought up. But we can see multiple supports here, even especially back here. 168.50, that is a key price to hold. We do not want to see a close under that. So that's TDOC. Next is PLTR. Still remaining weak. Don't like what the chart is doing. Essentially, it looks similar to TDOC. There's a resistance line right above with key zone that we're holding the lower part of the key zone. So upon a bear break of the market, if the market decides to go bear, these tickers, I imagine there's going to be huge follow throughs to the bear side. If you look at PLTR, there's not a whole lot of resistance or support that was developed on the way up here. So if we were to break down from this key zone, Next support down is probably 1925, but it's not very strong. There's only 2 rejections from here. Then the next support down, next key support down, I would say is right around there, 1590. You can see multiple rejection from there before breaking out. So aside from that, then you're looking down at $10. Be careful on your PLTR positions. Next is PDD. Now this is a little bit more stronger of a bounce. Slight bull divergence. RSI is slight. Actually, it's actually pretty decent. Considering the move from here, this is a pretty decent daily bull divergence on PDD. And we are seeing some nice follow through so far. Gap up opening above that daily 8 right now. We're going to need to hold that daily 8. Same idea as anytime you're looking at a break of resistance. You're going to need to see a break pulling away from it before a back test. All right, next is Wayfair. Ooh, straight back down. That's a little bit of a red flag now. Double top, chopsticks. Well, not chopsticks, but double top. Unable to break over that 349.08 resistance. Seeing a little bit of a bearish action. So we are playing this for a monthly bull flag. Now that monthly bull flag confirmation does not look so good, especially given today is the last day. I want to see a little bit more green on the Wayfair chart. We are seeing increasing bull volume on the monthly. So we'd still give it a chance. Next month, we better see that follow through. On the daily, doesn't look so great so far. Let's see what the market does. We are seeing a little bit of a gap up. Wayfair, keep in mind, it does like to do its own thing regardless of what the market does. Next, so that's the hottest stickers. The next ones that we're going to cover, first one being Airbnb. Airbnb daily bull divergence that saw some decent follow through, but we are still rejecting under that daily 8. And from here, as long as that daily 8 does not break, we are still under the 0.382 as well. Chart remains weak. First sign, we're going to need to break over that 88, followed by the 0.382 before we can even think about getting up to the GP. So GP, judging by the time that it's going to take, we might see a confluence with this previous rejection trend line that is somewhat still in play. We had last time we broke over it was a breakout fake out, followed by a huge sell off of 22%. So be careful on Airbnb. Right now, it still looks bearish. Next one is Facebook. Oh, big red flag. We broke over that key. There's 3 key resistances. Previous highs. 291.78, 297.38, as well as 304.67. So the chart was looking amazing on the way up here and looking amazing from where we bounced from. But now we are seeing a rejection from that first resistance, 291.78. Chart does not look so great anymore. Maybe, I think that's a rejection from GP. Yeah, unable to make it through GP, which actually lines up with the 291.78 resistance. I would anticipate further follow through on Facebook today to the downside. So look for that early volume. Next is APHA, seeing some decent follow through on the bounce from this wedge upper trend line backtest. GP hold of the GP, that was a beauty. We're gapping straight over that daily 8 with somewhat of a decent room. 3% from the daily 8 now. So marijuana overall, I would probably imagine TLRY is looking the same. No, TLRY looks weaker. We're gapping up straight into daily 8, so that's a little bit of a cause for concern. Gapping up straight into resistance generally sees sell off from there. We are still holding that key support 21.58. Multiple bounces from there. Chart is getting very tight for a move. So APHA, we're going to need to see some follow through today, pulling away from that 88. Next is skills. So with skills, Okay. Yesterday we did break down under that daily one-to-one extension target, which lines up with the key support. 1775, 1776 is the key support. This should be a strong support here, but we're gonna need to see follow through. Decent gap up of 2.7% today. We're gonna need to see follow through. Chart still looks weak. There is a long-term daily channel that we are seeing, and yesterday we saw a bounce from the lower trend line of the channel. That was a perfect entry, you know, one-to-one extension target. You move down, slight wick from it. This is an amazing candle. For bullish plays, let's see if we get that follow through on skills. I'll be keeping a very close eye on skills. Next is PSTH. Weak follow through on the daily daily bull divergence. So we came down to the last key zone that must hold, formed the daily bull divergence, saw some 10% bounce. Not bad, not that great. On this kind of move down, after this kind of move down with the bull divergence on the daily, you want to see more follow through. That yesterday's Wednesday, Tuesday's move down was a little bit of a red flag. We are still trading under that 88, so a lot of charts are remaining weak out there. Right now we're seeing, okay, so make sure you note this. Early on today, as in right now, I am seeing a little bit of a discrepancy on the shorter time frame between NAS as well as SPX. NAS is rejecting from 5-minute 8, while SPX is remaining relatively bullish. Yeah, so SPX in comparison is stronger than NAS early on today. And okay, next is, let's see, CCIV. There are quite a few tickers that want to cover. Let me know if you have anything that you want to cover. Thank you, Simon. Good morning, everyone. All right, CCIV on the daily. Head and shoulders pattern that played out. Broke under the neckline, but now we're seeing a bounce from it. Interesting. Choppy action. Bullish engulfing candle with a gap up, straight into daily 8. Watch for that early volume. Based on gapping up straight into daily 8, I would anticipate further sell-off from here, especially the break of the neckline already. Let's do VIAC. What is it? Huang stocks? Pre-market flat. I don't trust it. We are seeing support from that GP lining up with the key zone. So you can see previous bounce, stall, bounce and rejection, rejection again. So this is the key zone that must hold before breaking down further to 37.32. However, right now on the daily, you would have expected a much more decent bounce based on the chart, just simply from a chart standpoint. After this kind of sell-off, if the chart was strong, I would have anticipated within 2 days, 30th, yeah, within 2 days, we should have seen a much more decent bounce. So wouldn't be touching this chart anymore. Had a meh trade. I think I made $30 on it, but from here, because of how we're bull or bear flagging on the daily, would not be touching this chart. And BIDU, I think that was looking a little bit nicer. See, this is kind of balance that you want to see. On BIDU, with after this kind of sell off into GP, you're gonna need to see a more decent bounce such as this one. But right now, daily A is catching up. Let's see if we get that touch today. There is no daily bull divergence on BIDU. I thought there was, but I guess there's no bull divergence on BIDU. Kathy's been buying BIDU. is basically the Google of China. So if of all the Huan stocks, if any were to move, I would expect Baidu to move, especially with Kathy backing it up. So keep your eyes on Baidu, see what the reaction looks like on the daily 8. And wanted to also cover, let's take a look at RBLX quickly. Nothing interesting right at GP right now. There's potential for inverse head and shoulders patterns setting up. If that is the case, then this would be the neckline. And we're going to need to see a reversal from here right now in the GP. GP must hold for inverse head and shoulders pattern. And space. So ARCX, Explore Expiration. Kathy's Explore Expiration ETF started trading yesterday. We saw a little bit of bullish action on space yesterday into that 88. Unable to close over it. We're going to need to see further follow through today. So the interesting part about space I was looking at is when you look at this on the weekly chart. Actually, no, it was a daily chart. Daily is even clearer. So last time we had a bounce, it was a bounce, came back down, saved that 88, bounce. This was basically a bigger move, exaggerated move of this. Then a huge bull break, same idea, a huge bull break. And now we're seeing that big, after the big sell-off, a bounce with potential of a higher low. Now a bounce with a potential of a higher low. So if that is the case, the next move up should be a move, or the next move should be a move upwards. And if so, I would anticipate a move towards that 0.382, because this move would outweigh the previous high. This move outweighs the previous high. Actually, let's do a quick measure. Near that 0.382. So the move should bring us to nearly that 0.382 before some more sideways action. If that is the case, then we'll be looking similarly at the previous wedge pattern setup. Now, first of all, let's see if we get that follow through today, moving into that towards that 0.382. So space, ARCX. I don't think I saw any additional buying of space yet, but let's keep a close eye on it. This is the projection that we're looking at. See if that works out. If not, then we'll be looking. Okay, it's actually not that much higher. Looks more like a double top. Yeah, a little bit higher before the next move down. Okay. And a few others that ARC's been buying, noticeable buying, being, oh, chart actually looks amazing. We didn't touch that trend line yet though. So there's been 3 supports on this trend line so far. Based on the whole move, we are seeing a support right at 0.5, near that 0.5. So key price to note. The open of this candlestick. Wonder if you can bring it back a little bit. Somewhere around there. $71 must hold. We cannot see a close under from here. I still want to see a touch of the trend line, but we might not see it today. Today, tomorrow, let's see. Today, tomorrow. We might see it tomorrow. Yeah, a touch of that trend line alongside this previous key support. From there, form a shorter term bull divergence, and then we can see a bounce from there. The chart actually looks decent, especially given that we are finding support around the 0.5. So keep your eyes on Beam if that's something that interests you. Not a whole lot of price action so far. Okay, next is utilities. Utility software. This ticker had such a big hype on IPO, and you can see why. The hype had moved of 168%, and now we have retraced majority of the move. We are trading under the GP. not really a nice daily bull divergence. Wouldn't be touching it. Next one, what do we have? BIDU, TME. TME is seeing a gap up. TME looks very similar to BIDU's, same kind of idea. Sell off because of the Yuan leverage or margin call. So straight into GP, key zone, bounce from there. Now we're seeing a little bit of a gap up, still seeing that resistance. So let's see if we are able to break over this. Previous resistance, 22.25 is a must break. Once this is broken, there's going to be a lack of resistance all the way up to 23.96. So right now we're still seeing a stall there. Already 2 candles. Today it could be very well like the SPX kind of chart where we touch it again and then reject. And what else do we have? GSX. 14 minutes left. GSX in the key zone, lack of a bounce. Red flag similar to VIAC, lack of bounce, huge bear volumes forming a daily bear flag right now. First sign is you're gonna need to see a break over yesterday's high following by Tuesday's high. But even the gap up does not look strong. VIAC, VIPS. Then we'll take a look at GME as well as AMC. VIPS looks similar to BIDU, a little bit stronger. We're going to need to break this Tuesday's high to see further follow through. All of these China stocks, margin stocks, Yuan stocks, whatever you want to call them, they all still giving me a little bit of red flag feeling where the balance is not that strong aside from BIDU. TME is decent. So other than that, everything else is just forming a daily bear flag right now. All right, next is GME. Still within that inner wedge. So unless we see, so we're going to want to see increasing bull volume today breaking over this upper trend line. Ideally break over this key resistance as well that's been keeping us 213.07. If we do, we should be looking up at this upper trend line 275-ish. If we see a straight rejection, we'll be looking at the inner lower trend line around 139. Huge moves. We should see some decent moves today, tomorrow. Let's keep an eye on GME. AMC. In comparison, AMC is still relatively stronger. We did see a rejection from the GP after a bounce from this GP. Then some weakness showed up. As long as this trend line holds, AMC is still looking relatively strong comparing to GME. There's not as much volatility in AMC comparing to GME. Any other tickers? Let's see. I think that's it. All right, we're gonna keep it. Actually, there's a couple other ones. Suncor. Wanted to review the Canadian ones. We haven't touched it ever since we took profit from up here. Didn't nail the top. Somewhere more so around here. So let's see if there's a better entry now. Century Suncor, I'm still looking at the GP for the most ideal entry, which lines up with this key zone right here. If we get to the GP, I will be taking an entry around that $24 mark. Sorry, bear with me. Lots of charts to update. All right, next is Air Canada. Same idea, still trading under the daily 8, still looking relatively weak. I am looking at the GP, which lines up with this previous high 23.55, which we also saw some rejections from that price. 23.55 would be my ideal first entry before coming back down to the lower part of the key zone. There's lots of move on AC. Even right now, if you were to get an initial entry, I think that should be okay. Because upward wise, I am looking around $40. Right now we're trading at 26. So even from 26 just to 40, the 1 to 1.618 extension, that's a 53% move. This is gonna take time, but AC is remaining on top watch. All right. That's it for today's video. Hope you guys enjoyed it. If you know anyone that may benefit from our videos, please make sure to retweet or reshare our channel. If you're looking for that financial freedom and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. And remember, the best compliment you can give is by spreading the word about our channel. Also, check out our website and Twitter. Website at totalcontroltraders.com and Twitter at _TCTraders_. We offer a subscription model to our chatting platform where trading ideas are shared, charts are reviewed live, as well as my personal trade callouts with the most recent result of 90% correct between March 1st to March 15th. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.